Hi everyone, I'm Jerry Davidsey, CEO of Presilium Private Wealth. Welcome to Financial Planning Fridays, our weekly video series on financial planning where we work to simplify wealth management decision-making for our clients so they can focus on what is most important to them. In our 31st Financial Planning Fridays episode, I wanted to show you why it is so important not to take the same investment approach that many of your neighbors are using and to avoid acting on their advice. The American Association of Individual Investors is a nonprofit organization that has completed a weekly survey since 1987 where they ask a simple question. Do you feel the direction of the stock market over the next 6 months will be up, bullish, no change, neutral, or down, bearish? We looked at the results of that survey and then compared them to the return of the S&P 500 the year afterwards. How accurate are your neighbors at predicting which way the market will move? Let's look at the data together. The bull-bear spread that we looked at in this survey is the percent of survey responses that were optimistic or bullish minus the number that were pessimistic or bearish. This chart shows the 5 worst average bull-bear spreads since they started the survey 35 years ago. These are the years where investors were feeling most pessimistic about the market for the next 6 months. The returns listed above each of those years is the market return the year after those surveys. The S&P 500 averaged more than 24% the year after when the survey respondents were most pessimistic. All 5 times the annual return was positive, and every year had a return that was well above the average long-term return. Now, let's look at years when investors were most optimistic about the market instead. In the years following the 5 most optimistic average survey years, the average return was only 4.6% per year, and 2 of the 5 years were negative. This is about 19% lower than the years after investors were most pessimistic. This survey tells us that the market has outperformed in the years after especially pessimistic investor sentiment surveys, and underperformed in the years after optimistic investor surveys. Warren Buffett has said to be fearful when others are greedy and greedy when others are fearful. This has certainly proved true over the past 35 years of this survey. And this is especially relevant today. The most pessimistic average year for the bull-bear spread in that survey was last year, 2022. I don't know what the full year 2023 will bring, but looking at the previous results when investors have been this pessimistic gives me another reason for optimism. Thank you, and we look forward to talking with you again soon.